Well, good afternoon. This is Pat Cruzy with the Big Iron Livestock Market Wrap Up, and it is Monday, the 3rd of November, and I've got Daryl Holiday with Country Futures out of Frankfort, Kansas. And Daryl, we say it every week, another exciting week in the markets. We saw a significant swing in the markets, downturn in this market for multiple days in a row, and then it seemed to recover and took a breather down there in that 330 range. And after a lot of excitement, conversations, boy, the social media posts were getting blown up. People that were not so happy with Trump's tweets, and those that were supporting him and saying, just relax, it's just a market reaction to some of these conversations. And maybe there were some groups that had met with Trump and didn't meet with Trump, and got him fired up. But all in all, we saw $44 to $45 down in a matter of days. And but I was at some sales middle of the week in the heart of Nebraska at some of our better local markets. And when it was all said and done by Thursday, we were maybe down $100 in cash overall on a 5.5 weight calf. They were still trading for $2,500 on Thursday. So not near as bad as it could have been. But early on in the week, Monday, Tuesday, there were some sales in Oklahoma City and in southern Kansas, Texas, that were down 300-400 bucks. So they were pretty
Yep.
hot
Yep.
about it. But we've rebounded from that. And now my question, and the question I'm getting from guys are, have we seen our highs? Are we going to start in a new trading range in $15-20 trading range here up to 350? Or what's your thoughts on the current markets and where we go from here?
I guess my first thought would be I think there's a reasonable chance that we've seen the high in the feeder cattle futures. And I could even argue that possibly in the live cattle, but I think it's the feeder cattle futures that I would say are the biggest target. Now, that doesn't mean we can't have the cash index go right back up there, but the futures, got well over 380. And so I think it'd be hard to, for me to project that they're going to take out that level because I thought that was pretty elevated anyway. But I think the cash market, I mean, and the same goes to Fed cattle market. We've had Fed cattle futures of 243, 244. Maybe we don't go above that, but we might see cash go back and revisit 250, 252 somewhere in between now and April. And I would be more cautious about thinking that the live cattle futures have definitely put a high. And I understand everybody's thoughts on that, but the reason I'm a little more lean towards the feeder cattle probably has, I think we somewhere down the road here, we're going to open up that Mexican border, and that will add to the supply of feeder cattle. And eventually that adds to the supply of beef back to quote some type of normality. But I just think the timing of that is really hard to predict and might very well what I'm saying, I guess you and I have talked, if you end up having that, if they say, okay, we're going to open the border January 1, and I'm not saying they're going to, but I'm just using a date,
Yeah,
that would have no impact on beef production really until late August, September at the earliest. And so that's why I'm still somewhat friendly. The Fed cattle supplies are still extremely tight, and we still
right.
have awful tight first quarter. And if you get any winter weather on these live cattle could be the beef could be very solid. So I I would lean more to that being true on feeder cattle, but I don't think it's going to just rocket lower. I think we got a lot of. I think there's a free reign up to 360 on the futures and the feeder cattle index anyway, in my opinion.
Yeah, you bet. Right, right. Yeah. Fundamentally, things here in the short term are not changing. We have got tight supplies, and uh, one of the questions that's come up and has been in part of the conversation the last weekend and even this morning with some folks is uh, the the conversation that Trump had and the administration, are we really they're wanting to manage beef prices, but is is where we're at. A lot of the folks in our industry that actually are producing cattle are saying, we're at levels where demand is telling us it's valued right where it should be valued. Um, Maybe, and consumers are not telling us specifically. They're saying overall a lot of their groceries are at higher levels, but they're telling us by continuing to buy hamburger and they're buying steaks at these prices, that it it's it's maybe at a high level, but it's not that high that they're going to stop buying. Um, do we need to have a concerted message as a group of cattlemen in the industry that helps educate our administration and so they understand, really what the issues are, and it's been a supply issue. Now it's demand driven, and they're telling us yet, at these prices, they're okay to continue to buy beef.
Well, I couldn't. I guess I couldn't emphasize it more that I'd answer your question emphatically. Yes, we need that message. Now, I think the conundrum here is that, and I don't. I may be speaking out of turn a little bit, but I really think Secretary Rollins. I think she really does understand it. She's from Texas. She's got a pretty good feel for that industry. As a matter of fact, she's got some real issues about concentration in the beef packing industry. Those are legitimate. And if you look at that 13-page deal they put out 2 weeks ago, I think all those are really good points. I think my concern is, President Trump's a pretty headstrong guy. We all know that. And I am concerned that she hasn't got his ear and grabbed it and said, hey, you don't understand what's going on here, and you'd be better off to be quiet because you're absolutely right. The answer is the consumer will figure out when beef's too high. The consumer will communicate you with their dollars. They'll walk with their dollars, not their feet. They'll walk with their dollars to something else when they can't afford it. And that's part of what has to happen when we ration supply of anything. I remind our people that when we went to 120 and $130 a barrel for oil, eventually what happened is, yes, we had more wells that were being drilled, but we also had people figure out I don't need to drive. I'm going to cut
Yeah,
back on my miles on $5. The consumer will tell you when it's too high. We don't need a president to do it, and we don't even need a secretary of agriculture to do it. But I'm going to come to the defense of her, and say to you that I think she's only defense. I think she does understand it. I just wish she could get the ear of the president to say, leave it alone. We'll see how it works out because they're not going to do anything. I don't even think the Brazil and Argentina thing. I know the Argentina thing's not going to be a factor, and I'm not totally convinced they're going to end up taking those big tariffs off those that Brazil situation because we've got some battle between us and Brazil over the soybean complex. It's a real problem too.
right, right, right. There was conversation, that looks like, the president and the conversations we've had with China were very positive that there's going to be more trade, and encouragement for more purchases of soybeans from America. And there was also a quote that, this may help us with some beef exports into China. What they may take in beef will totally offset what we'd ever maybe import from Argentina. And so, um, yeah, it was kind of a wild week. There was a lot of excitement, a lot of cattle groups, a lot of individuals, that are very well followed on social media that were pretty fired up and poking on Mr. Trump. And then there were some that sat back and said, "Now wait a minute. Yeah, he needs a little bit of an education from his advisors, but we need to talk about the truths and the real issues, which are maybe more of a manipulation by the Packers, and how they make adjustments, in their favor." Do you have any concerns on and any comments on on what the Packers are currently doing to kind of manage their profit in their pocketbook.
I think first of all, I've always had concern about Packer concentration. I have from for 25 years, 30 years, and I've always felt that captive supply cattle that we moved into in the late 80s, 90s had actually played right into their hands. So I've always been concerned about that, and I still am. But I will say this: what happened after COVID, many has really helped take some of that concern away from because I've seen a tremendous amount of smaller and regional packers have a significant impact on price of cattle. And so I'm optimistic that that's yeah, I would love to see some I really believe this country would be better off with smaller packers, smaller facilities, not giant 8, 9,000 head a day facilities. A lot more 1,500 to 2,500. I think COVID trying to showed that, and I think a lot of packers have now figured out maybe we shouldn't have a huge facility in Dakota City. Maybe we ought to have a good size in Dakota City and have one in southern Nebraska. You know what I'm saying? So that we're not sitting here hauling cattle from deficit places from surplus places to deficit. That's what's going on now. So they're managing it. They're in a tough situation. I'm not. I
Yeah,
don't want to just hammer. I do believe that concentration is a problem, have always, but I also think things will change. I think things have changed. I will tell you that was way worse in from 17, 18, and 19 because we saw the beef demand growing, but they were just holding down prices. They could do that, and it really hurt them in the end because it caused liquidation in the cow industry very quickly, and that's why our herd's so low. I would suggest you that packer concentration and drought are the two biggest reasons why cow herds got so low in the United States.
right. Very good. Well, sounds good, Daryl. I appreciate your input, and it'll be a fun week to see how the cash trade
Mm-hmm.
follows through, and we'll plan to catch up with you again next week.
Thank you.
All
Thank you,
right,
Pat.
thanks, Daryl.